go. Hello, mate. How are you?
How are you doing?
Yeah, very good, very good. Nice to see you, mate. All right, Sam, thanks for joining us, mate.
No worries.
Nice to have you here. So, it's really simple how it works. We're going to drive around 20 minutes. We're going to have a chat about trading, investing. We're going to give you the app so you can tell us a little bit about it on the Good Money Guy phone.
Yeah.
See how much money you can make in 20 minutes. All virtual money.
Yeah.
Doesn't make a difference if you make or lose.
Cool.
But anything you do make is yours to keep.
Cool.
But anything you lose, we'll put a line through. Right, anywhere particular you want to go?
Wherever.
Let's just do a tour of Canary Wharf.
Cool.
We'll do a tour of all the best spots. Do you do much trading, PA?
My career started as, I learnt to trade when I came out of university.
Yeah.
And so I did that for a number of years and then worked for a company where I would teach people how to trade as well and risk manage and mentor people. Traded my own book while doing all that, and I've worked with a colleague of mine where we had like a little fund together, and then eToro came about and ended up 3 years ago joining them. So still do a little bit of trading now, more swing trading than day trading, but and along with the investing.
So it sounds like you know what you're doing. So hang on, let's start the timer. There you go. You got 20 minutes.
20 minutes.
I know eToro positions itself more as a slightly longer term investing platform more than a day trading platform, but for the purposes of the challenge, it's how much can you make in 20 minutes. I think you'll probably be all right, actually. We've had quite a few people in today and only one has made money.
Oh, really?
Yeah, so your benchmark is not, you're not going to have to, I won't say how much they made, but you're not going to have to make a lot. You're not going to have to make a lot to win.
Sure. Yeah. And did they do it in a risk managed way, or are they sort of chucking it?
Remarkably risk managed.
Okay, cool. Because that was going to be my plan. Because I want this to be educational as well for people that are watching. So,
and I think that's a key thing about trading. I mean, like the just chuck it in and go is certainly one approach, but realistically, you need to have a plan.
Oh, 100%.
And you need to understand strategy. It's you just have to look at any risk warning, don't you? That it is an incredibly difficult thing to master or get good at. Yet so many people want to try it. So we're doing this to see if we can figure out what they're doing wrong and maybe try and provide some tips to help them do better.
Well, it's a great thing to do, and we run a course at eToro, which we've run it for a number of years, but we redefined it, and over the last 3 quarters, it's now been viewed by 50,000 people, and the feedback's been amazing. And one of the things we mentioned when talking about both trading and investing, and I mentioned this particularly about trading, is people starting out using the virtual account, spend a little bit of time trying to lose money. Now, what I mean by that is do all that. Your aim is to lose, and by doing that, you realise, okay, I need to avoid doing this. So what would you do? And people say, well, I would over leverage, I would trade too many assets at once, I would trade a minute before the news, or I would buy just before a big resistance level, and then you suddenly realise, okay, well, that's the stuff I need to avoid, so therefore I'm not going to over leverage myself, I'm not going to trade too many assets, I'm not going to trade at the wrong times, hold at the wrong period, and it seems to to help people. They sort of realise that having a bit of patience, not trying to be a millionaire overnight is more advisable.
And actually, you're not going to be a millionaire trader if you don't have a million quid to start off with in the first place.
Exactly.
I mean, there are people that have done it. Of course, there are. There's people that make money in all sorts of environments. But no, that's a hard thing to get to. So what are you looking at? What are you going to trade?
Well, so I mean, for me, the way I've always traded, I've always been multi-asset. So the currency pairs, a few indices, gold, oil was how I always started, and I was always someone that I've never been really that good at trading super volatile markets around like news events or the cash open, or if there was a central bank meeting, whatever it might be. That's when I'm not great. I'm better when there's the markets are a bit more quieter. Yes, I need the markets to move. So I'm sort of focusing on the Nasdaq at the moment, because obviously the volume's there, the cash open happened 1 hour 10 minutes ago.
Yeah. You're lucky actually. You're the only one that's been able to trade when the US is open. So you've got all those juicy stocks to trade, whereas everybody else has just been stuck with the boring FTSE.
Well, that's it. I was looking at the market earlier and I was thinking, well, is anything even going to move?
Yeah, we had the ECB, didn't we? Which was a bit interesting, but
yeah. I saw Lagarde was batting off every question as usual. But yeah, having a little look at Nasdaq. I mean, actually, do you know what? I do know Jerome Powell's been speaking recently, so usually what I would do here, I'd have a news feed up to sort of see what's happening. But we're coming into an area which I suppose you could consider a bit of support here. So I'll be keeping a watch on that. I'm also identifying. Let me just bring in another area of support down here. Just looking for those that are looking at the screen, and it's an area where the last time we traded there earlier this morning we went higher. So I'd say if I were to buy near enough where we're trading now, I'm wrong if we go below the bottom blue line, the bottom area support that I have. And where would I be right? Well, in an ideal world it obviously goes up straight away, but it's not always that simple. So I'd plan to take profit assuming price goes somewhere.
Do you always trade with stops?
Up there. To be honest, as long as I understand the product or the asset that I'm trading, I'm happy to trade whatever. Okay. I trade very much the same way across the assets. I'm I would say predominantly a technical analysis trader. So I'd look for the same kind of patterns across all different markets. So ideally I want more than one reason to get in technically, but also have a fundamental view that this market is going to go in the medium term higher or lower.
You've got to combine the two. You can't just rely on TA. There's got to be a fundamental basis as well. And the same with trading on fundamentals. If you're not looking at where the market is priced already, if you've got a great fundamental view but it's already in the price and the chart's already seen the upswing, then if you're not combining the two, then you're lost.
Yeah,
really.
No, I completely agree. And it's something where when people are completely starting out, you've got to have a play around to find out what markets you like, the style you like, and that's obviously the advantage of using a virtual account. But once you get to the market and find your edge, it's taking your time, doing that when that comes in, and not forcing anything. I think that's massively important. People feel like we're trading, well, I need to be in a trade the whole time. You absolutely don't. Only trade when that opportunity comes. If it doesn't, fine.
I think every single person that's been in today, I've said sometimes there's not a trade in the market, and just don't force it, just don't push it.
Yeah.
It may be boring, but it's probably the right thing to do. All right, we're 6 minutes in. How's your P&L?
Well, I just about to hit the trade now. I've been talking too much.
So so you're not in yet?
No.
Okay. All right. Biding your time, waiting for the levels.
Yes.
Why not?
Well, that's it. About to get into the market now. Just gonna choose where to place my stop should it not go to plan, and where I would place a target should it go to plan, which of course we hope it does. Stop below 17.8.
It's always worth having a stop.
Yeah, no, I completely agree. I think even in a small time period, you never know what's going to come out. A headline could randomly hit the news wires and the market's not prepared for it and it jumps or falls.
Do you guys have guaranteed stops?
Yes.
Or you just market them? Because that's a massive tool.
Oh, 100%.
In a trader's arsenal. I know it's a little bit more expensive, but for the way the markets are now, sometimes you get these absolutely ballistic moves, especially in things that are super volatile and quite liquid.
Yeah, no, absolutely. 17,800K. Order on. And I think that's important as well. For anyone looking to trade, I think it's really key to know what's happening on that day. That week. Like tomorrow, for example, we've got non-farm payroll. So if someone was, someone who liked to trade when the markets got higher volume, you're not going to trade in the morning because everyone is potentially waiting for the opportunity in the afternoon. So it's understanding, when could be the right opportunity for that particular trade.
Yeah.
Whereas if someone is awful at trading the news, okay, well, tomorrow at 1:30, non-farm payrolls comes out, I'm not getting involved at all. And then, am I really going to trade after that? Maybe not. Okay, I might not trade at all. And of course, then if you're an individual stock trader, have they got an earnings report soon, or have they already had it? Or it could even be like if you're trading a particular tech stock, has a similar stock had a decent size move one way or another, because that could of course influence that. So there's a lot of thinking that will go in before even placing that trade, and
absolutely.
so half the battle is the preparation.
Yeah.
And then obviously
and then the rest is post.
Yeah,
as well. Isn't
exactly.
It? Actually, hitting the button's the easy part.
Yeah.
It's which way to push it and what to do afterwards.
That's it, and a lot of people struggle with it. And to be honest, so in my old role, I mentored probably about 600 traders over time, and what we would do a study. So in the morning we would give them a selection of markets that they could look at, and then they would send me an email of the strategy that they would have for each market. So like long pound against the US dollar on yesterday's low, and it's also a trend line, target XYZ. And then we would review at the end of the day how those trades did, that they took their time to plan against the trades that they actually did. So the trades that they actually did, and these are very new traders at the beginning, they ended up selling where they actually were going to buy before, they reacted to a big candle either way, and on the whole they lost money. But for the course, when I did this study for about a year and a half, if they had only taken the trades that they planned to, they would have made money. And these were new traders, and it just goes to show that by having that plan and preparation is key, but also sticking to it when it actually comes in, because in that moment of waiting, that's when you start thinking other things, and you feel like you need to be in a trade.
You get bored and itchy trigger fingers as
100%.
well.
I mean, what really helped me was I'd plan my trades in the morning, set alerts, go do something else. Why do I need to be sat in front of the screen where I could be influenced and get, like you said, itchy fingers?
The only thing about that though, because I remember we used to muck about in automated trading strategies, this was way back when, and one of the things we always used to do, and just talk about economic indicators, is turn them off around economic indicators. Like if you had a position running, or you had some entry and some entry level, just turn it off around economic figures, because the market just goes haywire. And like, unless you've got an inkling of which way they're going to go, or you completely disagree with market sentiment, it's just not worth trading around them.
No, I'm not. I've got no interest in it.
Unless you're in the know.
Exactly.
And then you shouldn't really be doing that.
No, absolutely not.
So what's your eToro then? What's going on? Like, I mean, with Bitcoin, I know you guys are like heavily in crypto. Like, you guys must be super busy with that.
Yeah. I mean, I have a webinar that I do every Monday with our what we call club members, with our global market strategists, and certainly over the last few weeks, more and more people we do a Q&A at the end, and more people are talking about crypto. You've seen it in the build up to, obviously Bitcoin reached its all-time high just recently, Ethereum's on a big run, as are other crypto assets. So super busy. A lot of traders over the last few years have sort of been accumulating, dollar cost averaging into the assets. So a lot of people are pretty happy right now, and I think generally the consensus is that they think it's going to go higher, and they're happy to hold, and it's a long-term investment as well. So I mean, at the moment things seem pretty good, but it's not just crypto that's at all-time highs. With Bitcoin, you've got the Nasdaq, the S&P, the Nikkei 225 just hit a 40-year high as well, gold as well. So it's quite a good time, I think, to be an investor.
Do you reckon the market's looking toppy, or do you think do you think it's still got legs?
The way I always look at markets is, and a trending market like we are now, is that we're going to continue higher until technically it doesn't look that way. So if you ask me fundamentally what do I think, I'd say, well, I think we're due a little pullback, but it's going to be bought. Like if we get a 5% dip, people will be like, wow, let me have a bit of that.
All-time highs, just average in and in and in.
Yeah, so I feel like we can go on. We've seen this number of times over the last 15 years where it can just keep grinding higher and higher and higher. I think if we were to get a 5% or 10% dip, then I still think there's quite a bit of money on the sidelines from bigger players, and they'd be more than happy to take the chance on that.
I think there's a lot of our analysis is saying that these big stocks are great, they're at all-time highs, but there's a sort of limited exponential top on them. They've already been 10 baggers. Can they Can they double again?
Yeah.
Like that's a big double from 3 trillion to 6 trillion. That's a big double. So I think there's probably value in the peripheral markets. So look, we're 15 minutes in. How's the trade?
Let's have a quick look. We're down a little bit. It seems like the Nasdaq has decided to turn on me. I went long the Nasdaq, and it's come down a little bit from where I got in.
How far up is it today?
So it is, let me just quickly go back to our Discover screen, go to indices. So it's up actually just over 1%. So it's had
so that's a fair whack anyway.
Yeah,
isn't it,
exactly. And it's trading near its all-time high. And
it would be nice to do these things over like 4 hours.
Absolutely.
But I think chatting in the back of a cab for 4 hours, I mean, I've been doing a lot of chatting today. But like just chatting, to be fair, I could chat about the markets all day with anyone. But 4 hours with one trading session in the back is a lot.
Yeah, that's it. I think a lot of people would plan and prepare for a day, and if their trade idea comes, great. But in a 20-minute period where you feel like you've got to get involved, it can go the other way. But I think that's a good lesson anyway, right?
And do you know what? You've got stops and limits in there, haven't you? So you've got exit and entry. So we'll see where we've got 3 minutes left, but we'll see where it's going to go anyway. So in the last few weeks, so favourite features of the app. What's what do you like at the moment, and what's new to come?
I like how intuitive it is. We get a lot of feedback from people that are relatively new to the financial world, or whether it be trading or investing, and they like how you can switch between.
Deliberately stayed away from the Bloomberg black flashing lights, fruit machine look.
Well, that's it, and I like how easy it is. We've recently as well on the charting features on the desktop and the phone got trading view charts as well, which is an upgrade on what we had before. So we're always looking to improve the platform and speak to our customers, see what they want, and things are going well, and it helps that markets of course are near their all-time highs just for general sentiment around it. But we're always looking to improve our education as well. I mean, my main role at eToro is education, the podcast, the webinars.
I think that's the key. That's the key thing, because at the end of the day, like brokerage platforms, they're all the same, aren't they? They're all selling the same biscuits, which is access to the market. And there's a limit to how many trading centrals, trading views, auto chartists you can put in, because I think ultimately people like the third-party services for trading ideas, and they just like the simplicity of a trading platform. I think that's one of the really good things. And your point, education is massive.
And it should be free, in this world, and we constantly looking to build new guides, new webinars, on the podcast. And it's important to build the trust, and for us, if customers or clients, whatever way you want to look at it, do well, enjoy it, they're going to stay on the platform, aren't they? So,
and commercially as well, like a long-term customers are well, for one, a happy customer because they're making money, and a happy broker because you're doing what you're supposed to be doing, which
100%.
Which is helping them make money. Top 3 tips for new traders. This is obviously for the purposes of compliance. This is not investing advice. This is general guidance. We're chatting its opinion. So, in your world, of all the traders you've seen, in your previous roles, in your current role, what are the top 3 things you'd say to traders that can help them get started?
So, I would say the first thing is you've got to understand what kind of trader you're going to be. You've got to understand yourself, and trading in general, when you start out, you find out a lot about yourself anyway.
True.
What type of markets might suit you, what kind of risk taker or appetite you might have. So it's important to try and find that out. There's questionnaires that you can do. You can use the demo account for a number of weeks to try different markets and setups to find what suits your personality. So that would be the first thing. The other would be not to rush it. Do not feel like you have to make money right now. The market's always going to be there tomorrow, and at the end of the day, in a trading or investing career, it's not about how much money you make in the current trade or the next trade. It's about when you stop, it's how much you've got then. And number 3 would be, don't risk too much. I spoke with, I've spoken with many traders.
Over-leverage, such a killer.
Yeah, absolutely. And I was speaking to new people, and there's no reason why they would know. But when you ask the questions like, how much should you, or do you think you should risk a trade? And people say 5%, 10%, 15%, 20%. You're thinking, wow, I mean, like, you're going to go through a period where you lose 5 trades in a row. That's just normal.
Yeah.
And suddenly you've lost half your account or more. So don't feel like you have to risk too much. You know, certainly from a trading point of view, I think it would be no reason to risk more than 1%, because you need to stay in the game and you've got to be consistent with that risk. So
it feels boring, doesn't it, though, like allocating such a small amount, but it's a massively high risk business.
It is.
Like, there's risk warnings are there for a reason.
Absolutely. You know, and you're competing against people that do it for a living, so you've got to do it properly. Absolutely. All right, final bit. We're a little bit over. How are you doing P&L wise? All right, let's have a quick look. Let's get the portfolio up. It's stabilising, but still down a little bit.
Still down on the day.
But
never mind.
Not to worry.
Never mind. That's what trading's all about, isn't it? It's taking a loss and fighting to trade another day.
Yes, absolutely.
That was good. So actually, final point. One last thing for traders: what should they avoid? Like, what's the one thing they should be mindful of? If there's one mistake you've seen everybody make, when they're starting out or they're sophisticated traders, what's the one thing? Don't do this.
Don't feel like you just need to be in a trade, and so those people that force it are more times than not going to come unstuck in the long run. It could absolutely work out in that first instant. You know, I've seen people come into a trading floor, do no prep, get into a trade because they see a green candle and it works, and that's almost the worst thing that could possibly happen, because they think, well, it's going to work the next time after. So it's do not force it. Take your time, find a process that works for you. Don't get influenced by what someone else has traded or they're doing, because it's your own journey. So it's having the patience, sticking to your plan, and making sure that whenever you want to end up stopping trading, that you're better off than where you are now.
Absolutely. Yeah, good stuff. Right, let's have a look at the final count. Do you know what? That's not too bad. So the equivalent of 31 bucks down.
Yeah.
That's some good chat there, though. Some good, some good tips. Thanks for getting involved.